Good morning from the Asia Pacific. It's 9 a.m. here in the city, half an hour away from the opening bell, of course, Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning: Asian stocks struggling for traction after Wall Street's tech rally as Fed officials call for further evidence of cooling inflation before cutting rates.
Now, economists surveyed by Bloomberg raising their growth forecast for China, citing a better outlook for exports even as consumer spending slows.
And China hails the return of a spacecraft carrying samples from the far side of the moon in an important milestone for future lunar exploration.
Yeah, we'll talk about the moon story in a moment, but back here on Earth, and certainly when you look at where CGB yields are, a lot closer to multi-decade lows that we hit, I would say, about 2 months back. So watching that very, very closely, and any potential pushback, I think is the operative word there. Of course, it's we're looking at day two of the summer Davos, of course, in Dalian. A lot of guests coming through, of course, these next few hours or so. We are also entering day two of the Standing Committee meeting, and certainly we'll get you more updates as we do get them, of course, as the news trickles through. In terms of winding up here is on the sort of offshore bond conversation. You have two today. Shimao very much in focus in the red sun. As far as sectors go, this rebound, of course, in tech overnight, so we're watching that very closely, plus also some of the gaming stocks. So non-Macau, talking about computer games, or Tencent, NetEase on the back of new titles coming online. Over 100 titles were approved by policymakers, and as far as data goes, it's very quiet. You have occupancy data coming out of Macau. Futures are pointing lower, though, Yvonne, ahead of the open.
Yeah, it's interesting, right? We have this whole big Nvidia rebound that, as Asia wakes up, we're not quite seeing the effects of that, which is interesting enough because yesterday, when Nvidia was in a correction, we actually saw Asia shrug it off. So you're not seeing that much of a tailwind, really, when it comes to overall risk this morning. We're basically flat. Perhaps some of the commentary that we got from some of the Fed speakers, like Michelle Bowman, overnight, talking about, look, they still see upside risks to inflation. That might lead to maybe still a bit of worries there on what the Fed's going to do. So you're basically flat when it comes to Asia. U.S. futures also, the dollar's not really doing anything. It's pretty quiet out there. Taiwan coming online, at least catching a bit here. Perhaps it's one of those chip stocks in that play here. But we're watching those 2 to 10-year yields right now. So it's interesting, right, where we're actually seeing the 2-year exceed the 10-year by the most since December. So that yield inversion is still very much there. In fact, it's something that really people are starting to deal with because it seems like it's the growth concerns that are outweighing the inflation concerns right now in this bond market here right now as we count down to that PCE inflation. Keep in mind, we also have a 5-year bond auction out of the U.S. later on today. There's been a trio. The 2-year yesterday actually had some pretty robust demand. So it just goes to show if we're going to have a softer print on Friday on inflation, perhaps these auctions are going to do fine. Well, meanwhile, when it comes to inflation, we're expected to get Aussie CPI pretty soon here. And it's interesting. We're expecting a reacceleration of prices here. So obviously, it's maybe going to give more impetus for the RBA to hold. They're largely seen as one of the last central banks out there, perhaps in Asia, to start cutting. So we're watching yields. Aussie dollar actually has been on a tear here and seeing continued upside risk for that currency in particular. And we're watching dollar yen, 159.73. Citi, interesting note, saying there's infinite possibilities for yen intervention. They're seeing multiple factors, whether it's the pace of the depreciation or the absolute level. Maybe we could see Japan step in as well. Bank of America also raising their forecast higher for dollar yen, 163 by September, 158 by year end as well. Keep in mind also, with those inflation numbers, Canada inflation also reaccelerated surprisingly. Take a look forwards here. I've gone a bit too long. Chip stocks are doing this in Asia here with Taiwan just coming online. So after we saw this about 6% pop in Nvidia, does it really change anything fundamentally? People say maybe not right now. So there you go. A bit of relief on some of these Asia chip stocks here this morning. Futures looking like this in China. We talked about things potentially being in the back foot as well. CGB yields, as Dave mentioned, right? So we're watching some key levels, that multi-decade lows that we're approaching here right now. When the 10-year, you take a look at 222, that's when we approach the levels that we saw multi-decade lows back in April before the intervention. So we're watching that 223 right now, 244 for your 30-year yield, Dave.
Okay, yeah, there we go. And, you know, as to your point earlier on, we heard from Neuberger Berman, private wealth senior PM, Steve Eisman, and certainly this conversation around Nvidia, of course, and what he thinks where we are in this recent sell-off on the stock. No more than a blip. Have a look.
I mean, if you look at the chart on Nvidia, you can barely see the correction. So, I mean, you know, on a percentage basis, it's down something like 10%, but you have to like peer really, really carefully at the chart to see that move. So I don't think it means anything. The people who own that stock know it's expensive, but they're buying into a story. And as long as the story is intact, like Nvidia is obviously intact, the story is going to continue.
Let's bring in Paul Dobson at this point, our executive editor for markets in the Asia Pacific, joining us out of Singapore. Paul, yeah, I mean, the Nvidia story, that's an interesting observation coming through from our guests overnight. I mean, the stock is up 3,500. So what is really 15% decline? And we were up to 6% overnight. We're not really seeing that, though, translate into anything here in the Asia Pacific materially as well. Why do you think that's the case?
Well, and partly, as Yvonne was saying, because we didn't react particularly strongly yesterday to the down leg either, so let's go for a recovery. I mean, it's sort of like in our part of the world, there's specific indexes or countries and companies within that react more strongly to Nvidia and the chip story than others. We keep an eye on South Korea, for example, and particularly Taiwan and TSMC, which is basically the the whale in our markets. That's the equivalent of Nvidia for the US. I guess TSMC something like 10% of the overall emerging markets gauge. So humongous weighting and impact and influence that it wields as well. So that's the one to watch for that kind of real where you see the read across. But I think that we're in a little bit of a drift, aren't we, right now in global markets, in global macro. We're heading towards the end of the month, the end of the quarter, the end of the first half of the year as well. That's going to cause some rebalancing and some unusual looking movements anyway, which I think might have been part of what we saw with the Nvidia story. We had the options expiries at the end of last week as part of the triple witching, and that seemed to cause some of that volatility as people were adjusting their positions, considering whether to stick or twist in a way with that holding too. And then, of course, as you were mentioning, the PCE data from the US at the end of the week as well has everybody a little bit on tenterhooks, and another reason why we're kind of a little bit in that holding pattern and holding our breath. Have election debates, we have a lot of political risk coming up over the next couple of weeks too. So yeah, lots to worry about, but that kind of leads to a little bit of inertia too.
Yeah, it's like almost the calm before all this political and data storm, right, this week. I feel like that's what we're in, Paul. Let's talk a little bit more about the Fed in some ways, and that does lead to the yen, right? I mean, it's interesting, that call from Citi about the limitless possibilities around yen intervention. Do you think that we're still feeling that sort of intervention risk like we have maybe last year? I feel like it's not quite the same this time around.
It's not the same. It's slightly different because, well, we've had intervention, right? We know what it looks like. We know what the impact is likely to be. We know how bad the drawdown would be. I think people are probably a little bit more wary as a result. And we also, have that sense that it's the pace of the move as much as anything else that determines it. I'm sure that there are probably options traders using those same strategies that they had previously with the yen. Looking for it to carry on nudging higher, but being careful with where they put their stops and that kind of thing. Do you think, the market wouldn't expect necessarily the BOJ to try and burn through its ammo before we get to PCE, which could help the yen if it weakens the dollar significantly, or it could be, the moment that really puts the market under maximum duress and encourages them to act at that moment to kind of nip any more weakness in the bud. That being said, it's not the same kind of crazy volatility and sort of hairline triggers that we've been seeing in terms of market anxiety for the currency just at this point.
Speaking of, silently gone away, I mean, the rally that we had in China, particularly onshore, I mean, the weakness that we've seen on the Shanghai Composite, the CSI 300, Paul, how is your team assessing how that looks moving forward, as we go into, to your point, as we go into the second half too?
Yeah, and with the third plenum on the horizon as well, but I think that expectations for that are pretty low, and I think the expectations for that have been set pretty well low as well. Don't expect any big policy surprises, seems to be the message. 5% growth this year is going to be fine. We're continuing with that mission of rebalancing the economy. There's going to be a little bit of suffering in parts of the economy as a result of that. And yet, you know, as long as there is that export growth and momentum, which is what economists have been homing in on as they revise up their growth forecasts, then that ought to be enough to kind of support the overall economy. It's not great for markets, unfortunately, but a big, crazy bull market and those big booms and bust cycles that we've seen in Chinese equities seem to be a little bit less frequent or less likely, and maybe that's a good thing as well. On the other hand, though, as you've been alluding to, the fixed income market probably gives us a cleaner read on the economy. Those extremely low yields, you know, belie it or give a sense of the very weak inflation expectations and the modest growth outlook that we have from here.
Paul, thank you. Paul Dobson there, our executive editor for Asia Markets, joining us out of Singapore. He mentioned that 5% growth forecast that the premier mentioned about. He seems confident that we're going to reach it. It seems like economists feel the same as well, given this latest survey from Bloomberg. And really what's driving that is this whole export, you know, growth that we've seen, you know, in China. I think the last 2 months we've actually seen exports do quite well. So maybe that can still be that strong pillar in the economy. Is it enough to offset the drag in consumption? Certainly is another question, though, right?
That is another question, absolutely. And whether or not we can still trust exports remaining a pillar of growth moving forward, right? We were talking about this a few days ago, this Goldman survey of their clients, and they're casting slightly more doubt there as far as the export number is concerned. But anyway, 5%, that's what the government has as a target. That's where economists think will effectively be. Okay, that takes us into really where those comments came from yesterday in Dalian, the World Economic Forum, and the meetings taking place there. We're entering the second day with a premiere this time yesterday outlining, of course, that thinking. Stephen Engel, our Chief North Asia correspondent, is there with us on the ground. Steve, what's up?
Yeah, day two, it's a little bit quieter today, and not as many people milling around, I should say, and mulling, of course, the Chinese economy, essentially because Li Qiang has departed, I assume, back to Beijing as he came in and gave that speech, talking about the risks of decoupling and a lot of messaging that has been heard before. And the people I've talked to here saying, you know, we kind of wanted to get a better, you know, insight into the playbook going into that third plenum coming next month at some point in Beijing. You know, Paul just talked a little bit about, you know, the expectations are fairly low. Well, people here that I've spoken to are saying, well, the expectations are pretty high because we're sort of running out of catalysts to give confidence to this market and to this economy. You know, as a proxy to the economy, the stock market has lost steam since those April rallies that was on the back of government proclamations of support. But that has really sort of petered out. So people here are kind of trying to figure out what the direction is of the Chinese economy and what kind of policy is going to lift it up. I did speak to Ishwar Prasad from Cornell University earlier this morning. We talked about it all, including the trade wars that are sort of brewing between China and the United States and China and Europe on the EV fronts. And if the domestic economy is slow here, they're unable to sap up that excess capacity, industrial capacity in the EVs if they're not able to sell them abroad because of those tariffs. This is what Ishwar Prasad had to say.
One of the elements that Li Qiang did talk about was weak consumption in China, and that I think is a real concern for the rest of the world. China is, you know, leading its economy through a production-led recovery that is creating a lot of excess capacity here, and if that cannot be absorbed by Chinese consumption, by Chinese domestic demand, then it's going to have to be exported to the rest of the world, which is precisely where the concerns of the rest of the world come in.
And that will segue nicely to our next conversation coming up in the next half hour with Xiaolin Chen. She's KraneShares head of international. We're going to talk about some of the ETFs that she's looked at. She's been proclaiming, or actually kind of asking for some patience and to see the rallies in the stock markets, which, of course, as I've just said, sort of have petered out a little bit. So we'll get her outlook on the Chinese stock market right now. And also, we're going to hear from Rafizi Ramli. Just walked past us just a couple of minutes ago. He is the Malaysian Economic Affairs Minister. Lots to talk about there, with Malaysia sort of representing, at least here, the global south and non-aligned nations who have great things at stake with the China and U.S. relationships and what is going to be happening to the economy there as they attract lots of chip investment, not only from the United States, but also from China. It would be a great conversation coming up in the 10 o'clock hour. And then the man who was on my panel last night, we talked a lot about the U.S. economy and how it is in ascendancy, if you will, continuing strength of the U.S. economy, and also the king dollar. Graham Allison, he will be joining us. He's Harvard University professor of government. He's also the former U.S. Assistant Secretary of Defense in the Clinton administration. We had a great conversation yesterday in the panel late last night.
All right, look forward to it, Steve. Thank you. Our Chief North Asia correspondent, Stephen Ingles, joining us out of the World Economic Forum in Dalian. And coming up, OpenAI is said to be taking steps to block China's access to its AI software. All the details coming next. And of course, we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. Here today, your fix just crossing the Bloomberg here right now, 712.48. So weaker for the day here as well. And I believe a third day that we've seen a fixing above that 712 handle. This is Bloomberg.
Okay, welcome back to shows day number 6 of a weaker fixing. So we're closer now to 712, the midpoint between 712 and 713. Weakness coming through across these equity markets, and yeah, I mean, everything's pointing down, including, of course, where we are in yields. So we'll watch it closely. We're getting close to those April lows on the CGB space. All
right, let's talk a bit more about AI and all that. OpenAI is reportedly taking steps to block China's access to its AI tools. The move by the ChatGPT creator is set to be effective from July. Let's bring in Annabelle Drewler, joining us now with the details. So what is being restricted exactly, and why now?
So this relates to OpenAI's API. So that's essentially how developers get access to things like ChatGPT, for instance, other OpenAI tools, to then integrate it into their own software or their applications or their platform. So that's what's being restricted. So the story actually was first reported by local media yesterday, and they were saying that Chinese developers would be cut off from using these from July, so just a couple of days away from now. It's interesting, of course, to note because OpenAI is officially unavailable in China, but we know that developers are continuing to use it through things like virtual private networks or VPNs. Yesterday, after this story started being reported in local media by the likes of the Securities Times, for instance, we actually got confirmation from the company itself, and that's the quote there that we got. Essentially, they're taking additional steps to block API traffic from regions where their services aren't supported here. To the other part of your question about why now, that part is a little bit more unclear to us. We know that, for instance, OpenAI has been cutting off or shutting down so-called influence operations in places like China just as recently as a few weeks ago because, of course, there's concern that the likes of ChatGPT could be used for these misinformation, disinformation campaigns. There's pressure on the likes of OpenAI in a key election year around that. But then, of course, overarching theme just continues to be the geopolitical tensions and the sort of pressure campaign from Washington to restrict China's access to AI technology.
Any adverse or otherwise reaction so far?
It's been interesting because of no reaction from Beijing, which you might expect, given especially that OpenAI is officially unavailable in China. But where the more interesting reaction has come from the private sector, actually, because we know how much competition there is within China to create a sort of ChatGPT equivalent, and that's something that you guys actually spoke to even Kai-Fu Lee about from Sinovation Ventures, saying that we're really yet to have that moment in mainland China. So yesterday there was the likes of Alibaba, for instance, Jipu AI, that's also backed by Tencent, and they put out notices sort of saying, hey, if you're a developer that you had your access cut off, come to our own platform. And so there were incentive campaigns that came out yesterday. So they're really trying to pick up from that. This is probably a net positive for a lot of Chinese tech giants because you're just further restricting the international competition, and it does sort of play into that broader theme for China, especially as we approach the third plenum. There's that focus on tech, on self-sufficiency, and that also applies to AI tools.
Belle, thank you so much. Annabelle Drewler, sir. Let's pivot now from tech. Let's talk about property. So you have Shimao, Chinese developer, of course. Shares are just getting underway here. In the pre-markets, we're down about 2.5%. Well, the company is set to defend itself in court today. There's a creditor demand, of course, for liquidation, and the creditor specifically, of course, is a Chinese state-owned bank, if I'm not mistaken there. Let's bring in our bond and loan reporter, Loretta Chen, to take us through the significance of why the Shimao case is well, significant and material.
Well, Shimao is a sizable developer in China. It has a lot of luxury hotels, residences in some major Chinese cities, the first tiers, and it has been a defaulter since 2022. So it's been 2 years since Shimao has been scrambling to try to restructure its 11.5 billion offshore debt. So that's a lot of amount. And in the past 6 months, we're hearing that Shimao has been faced with a lot of rejections from its creditors regarding its initial plans for restructuring, so that CC, China Construction Bank, winding up petition came in April at this pretty inopportune time for the company. It's trying to add more pressure in terms of, where the restructuring is going, what kind of terms that the company is proposing. Well, the latest we're hearing is that the company is trying to sweeten these terms, including, adding some convertible bond options and lowering the share price these convertible bonds can be converted to. So these are net positive for the company. This is the first ever hearing, so we're not expecting any kind of liquidation surprise coming from Hong Kong court. I think Shimao would potentially be given more time to work on that negotiation process.
Well, I think the cue is if you get an adjournment, it means you're making some progress on something, right? All right, Loretta, thank you.
No news is good news.
We'll be checking that at the bottom of the hour there. Loretta Chen, our bond and loan reporter here today. Take a look when it comes to the pre-market in Hong Kong. It looks like we are still seeing some downside when it comes to stocks here today. We're down some 0.7%. Obviously, the property space is very much in focus. Some of these game makers as well, certainly one to watch. As well, yesterday, tech was certainly where we saw a lot of the flows. Maybe we'll see a bit of an unwind of that, just given what Nvidia did overnight as well. We got plenty more ahead. This is Bloomberg.
Good morning and welcome back to shows. We're starting things off with a preview of what perhaps to expect in this CGB rally, and the more this continues, the more this risks running into a policy wall and pushback from Beijing. So on absolute levels, we're getting extremely close now to those April lows. Now, not specifically that would trigger, of course, any intervention, but we know, of course, how authorities have warned of interest rate risks given if and when rates and inflation come back up. Anyone who's sitting on these bonds might be in for a round of ouchie.
Hitting a wall, as you say. So that's one to watch here as well. The pre-market doing this. We talked about continue to see some declines here today. HS Tech is down about 0.4%. Dollar China was another weaker fix for a sixth session from the PBOC. So 728 levels here right now. But of course, we're still watching for that 730 territory. Analyst actions to tell you about. An interesting one on Geely Auto from Morgan Stanley. So they're resuming their coverage of the stock with an overweight rating, saying when it comes to growth, they've made a steady market share gains, also development of both new energy vehicles and overseas markets boding well. SGM Holdings also raised to a buy there as well. But watching these game stocks as well after some approval from China on those domestic games in June. Back, you're watching the China show. We're kind of on the open of markets in Hong Kong as well as in Shanghai, and we're continuing to see a bit of downside here today. Hang Seng seeing a bit more, down about 0.7%. So certainly the effects that we saw yesterday with, of course, the Nvidia sort of thing overnight, not really translating to this session here. And tech certainly seems to be what's driving things lower here today as well. There's not a whole lot going on also, Dave. What are you watching out for?
No, well, I'm struggling. And now that you tossed to me in that manner, I'm struggling to figure out what to say. I have 10 seconds left to figure out what to say ahead of the opening bell. Why don't we start with the fact that Australia inflation is actually set to come out?
Yeah.
But it's the monthly number. It's not a quarterly number. So I think that's half the basket. But it is an indication, of course, of price direction. We'll break those numbers to you a bit later on. We're entering day 2 of Summer Davos. We're also entering day 2 of the Standing Committee meetings in Beijing, and of course that lasts all the way till Friday. CSI 300 weakness, again, I think we're looking at a 6th straight session of weakness across the CSI 300. Inflation bottom. Ooh, that's hot.
It's
okay.
hot. Yeah.
4%. That's the third month that's coming hotter than expected. More on that in a moment. I'm sorry. Okay. Maotai still seeing some weakness as well. We're looking at the bond markets very closely. And as you can see, there's still some upward pressure on prices. It's not as strong as we've seen in recent days, but effectively at these levels, you're about 1 basis point above the trough that we hit. I think it was April 22, and that was a multi-decade low on the 10-year. Now, at that point in April, late April, that's when the PBC came up with some verbal intervention to effectively cap the rally at that point. We went up, and we're back down almost to that level. Change things up when you look at Hong Kong and the open. We're seeing here a couple of things to tell you about, right? So you have gaming approvals coming through, 107 domestic titles. That puts Tencent, of course, in focus. You also have this, our reporting, of course, on Meituan, and the company considering or said to be mulling, to borrow one of my favorite words in the dictionary here, over $1 billion of regular bonds. And when you look at spreads, it certainly does make sense. Absolute yields are down, spreads are quite tight. Why not tap the bond market? 6 cents of 1% to Yvonne's point, and some weakness coming through in tech. Dollar China, the 6th straight session of a weaker fix coming out of the PBOC. And MSCI China, this also reminds me of the fact that when you look at measures of actual vol, whether that's, I think, 10, 30, or even 6-day, we're back to levels of about 3 years ago on MSCI China itself. Okay, very quickly, so we talked about Tencent. NetEase is going to come up on your screens. BYD. Berkshire has now cut its stake to below 6%. That's a gaming title. That's an EV maker, of course, plus, of course, Geely Auto. Some changes as far as analyst ratings are concerned on Geely Auto and also on SJM. Right. Very quickly, I'll end on this. So the CSI 300, we talked about this. So 6 straight days of losses. Some of the momentum indicators are suggesting that things are actually starting to really, really lose steam and reaching some extreme levels. So 2 measures we're looking at here, Bollinger Bands, RSI, both indicating that we might actually be in oversold territory. Reason I mentioned that, the last time we were actually, at least specifically on the Bollinger Bands, below the lower end, that actually spurred a rally the last 2 times that happened. We'll see what happens here. Yvonne.
All right. As you mentioned, the Aussie dollar is moving here this morning on the back of that hot inflation print. So 4%, we haven't seen a handle like that basically since November of last year. So the highest sort of inflation print we've seen all year. What does this mean for the RBA? I think this is just going to add to more speculation out there from bond traders as well as these FX traders that they might have to hike rates at the next August meeting as well. BE says don't buy it. Right now, we had to get a bit more of these prints to see a clear picture of where inflation is heading. Is it really a reacceleration of prices that people are over or underestimating here right now? But James McIntyre is saying, look, you got to watch the June CPI print. You got to watch the first quarter inflation report that's due at the end of next month, which is more relevant, he says, than just one data print alone right now.
Yeah, because this is the monthly print, which doesn't include some parts of the basket.
Yes.
But the trend is important, too. I mean, to your point, right? This came in at the very high end of forecasts of
Canada.
forecasts.
Look at the inflation there, reaccelerating after they cut rates recently. So
hence why the Fed is cautious.
Yes, and the RBA. Yeah.
There we go. Okay. Who's not cutting? Well, everyone else, right? Okay, let's take it back now to the World Economic Forum taking place in Davos in the Liaoning province, in case you're wondering. Okay, Stephen Engel, Chief North Asia correspondent, is standing by on the ground. Steve, with your next guest.
Yeah, hot inflation is not the problem here in China. There are deflationary pressures, obviously, throughout this economy. And there was a bit of an optimism spike in the stock market, as we all saw in April, and as policy measures kind of came out. There was some exuberance, if you will, after January's lackluster start to the year. And now we're back to selling, as you just said, about the CSI 300 down again. Let's get some perspective. As we're up here in the Dongbei, the northeast part of China in Dalian, we're bringing in another Dongbei Ren here to the show to give us perspective on the Chinese economy. It seems to be a bit of a disconnect. We heard Li Chang yesterday talk up the prospects for the Chinese economy. He says they're on target for that around 5% GDP growth. But it seems like the individuals, the consumers, and foreign investors or investors overall are quite cautious. What's the disconnect, and how do you read the Chinese economy?
I agree. You know, obviously they did a really good Q1. Q1 GDP was beat expectation. He's confident they will achieve around 5% GDP. But he also addressed the challenges they face externally and domestically, which is, to me, a confirmation he will keep with the implementation of the accommodative policy in place. At the moment, market seems waiting for the next.
Always the next. What is the catalyst?
They got to do more aggressive in few things. One, reforms. Okay, reforms. State-owned is one. Corporates. I'm very glad he mentioned innovation or stay new, stay innovated over 30 times. I literally counted 35 times of innovation. And then he also mentioned corporate got to lead with this innovation. Hopefully that means July meeting will have come out with some good policies for corporates. That's one. Second, I also heard that IPO has been paused for quite a while. Hong Kong itself, I heard Hong Kong CEO, Exchange CEO, Xiaolin was saying that they have 110 application that is paused, ready to go. So
but
hopefully
they've only had 22 listings and they've been really lackluster.
Exactly. So IPO got to restart. That's another catalyst for us to feel like there's new healthy pipeline to come. Hopefully corporate reform policy, IPO to resume, both onshore and offshore in Hong Kong and in mainland. Mainland also paused for a long time.
But we've seen the listing applications in China triple, cancellations triple. And that's why Hong Kong has gotten a little bit of a spike upwards. Yeah. But again, just the higher listing requirements, they're trying to root out the bad apples. That hasn't, I mean, it's probably good for longer term, but it's not really sending a huge confidence boost that people are not coming into the market for IPOs.
True. They try to, like you said, cancel or willingly cancel if you are so-called the bad apple, your standards, your P&L, your balance sheet is not as strong. And then they also advise a lot of the company to go to Hong Kong to list, which open doors for international investors anyway. So at the end of the day, I think if they start to do right policies in July meeting, which they're quite looking for, but touch corporates, touch actually actionable items in July's meeting, that actually, the action part is a key missing. I think the government has to lead in action.
So how much patience should investors still have with China waiting for the market to go up? I mean, we can bring up the KWEB, which is your China Internet ETF, right?
Yeah.
And you in your blog or in some of your comments, you talked about how there needed to be patience, and it started paying off in April as policy, came in and the market came up. Between January 22nd and May 17th, that ETF saw a 40% rise, as you know. It's now down 13% since. So, at what point do you say, okay, enough patience, we need to see policy action?
Policy action definitely help, but I think market needs to start to rotate from the macro factor to fundamentals. Okay, the corporate earning is not that bad. Not if you look at Alibaba last quarter, it was pretty decent numbers. It's really the valuation, the earnings, the revenues are there. And then the companies are issuing buyback, okay? If the macro environment set to be more positive for consumer, which you hear Premier Li yesterday said, this market is unique, have 1.4 billion consumer, very complete ecosystems. If that is the case, they are welcoming international investments to come onshore, do more, show more, and execute more. So at the end of the day, consumer must stay at the front and center of China's economic return. Around 5% GDP is the target. Consumer has to contribute around 40% of that.
Is earnings that good, though? Because I'm just looking at 11 straight quarters of earnings misses for the MSCI China index. It's pretty weak, isn't it?
Some of the names with big, like a heavy industrial, more cyclical, had a challenge because the exports was quite weak, demand was quite weak. What is picking up quite a lot was those, they call them e-commerce, internet, information technology, you call them either ways. You see a lot of those companies internationalizing their business. That part of the business of the company actually starts to show double-digit sign of recovery or continuous beat. Alibaba, the quarter before last was 55%, last was 40, latest 66. So you see their international footprint start become more important to their overall picture.
You talked about, you alluded to the third plenum that's coming up next month, and reforms are important, but those are going to be longer term. What kind of market boosting sentiment could we get from the third plenum that you would welcome, the market would welcome?
You hear Premier Li yesterday was saying they want long and near term and long term. I hope that he really meant, he's like using a boxer term to say we will punch near term, we will also punch long term. So hopefully, July's meeting will give us both the policy in the near term and long term. Near term, you have to really let the capital market to run, i.e. IPO come, open that door. That's number one. Number two, give really favorable policies for the privates, let them to run. And also, I think that's stock of bunch of liquidity in the systems has not been channeled down to the industry, to the sector. He also mentioned 3 key sectors in his speech: AI, clean technology, clean energy, and also health tech. Those are the 3 sectors. He mentioned himself. He's very confident. He also said he believes those 3 sectors or industry can be trillions of dollars. If that is the case, let them grow, let them be. So I hope he will really announce those kind of policy in those 3 areas.
What does the bond yields of the CGBs are down again, and there was not intervention, but there was policy moves there to prop that up. Would you say that is a better proxy of what is really happening, of the weakness in the Chinese economy right now? These bond yields really going down again.
I think you will see that trends continue to be a bit of an up and down yo-yo format, form going forward, purely because the interest rate policy in China are completely different from what we have in U.S. They are still cutting rates. Well, they paused for a few quarters now, waiting for U.S., for the global counterparty, what they will do and what they will do. But at the moment, I think it's not a liquidity issue in China's systems. Liquidity is reached. Whether cut another 25 basis points or 50 basis points is irrelevant. Okay, the cutting is not the way to go. Make the liquidity go down, let the credit. So credit is an indicator that I watch a lot. Households and corporates are borrowing, but a bit of a okay-ish, not picking it up. We want to see that pick up.
Xiaolin, Chen, thanks so much for joining us.
My
All right,
pleasure.
Yvonne, lots to talk about in this market. Love being back here in China. Back to you.
Yeah, great to see Xiaolin in our region as well. Xiaolin Chen, head of international at KraneShares, and thanks to Steve, their chief North Asia correspondent, joining us on the ground there at Dalian. We've got some big interviews on the way from the World Economic Forum. At the top of the next hour, Malaysia's economy minister, Rafizi Ramli, joining us to discuss the nation's fiscal targets. And later on, we're talking geopolitical tensions with the former U.S. Assistant Secretary of Defense, Graham Allison. Plenty more ahead. This is Bloomberg.
Right, welcome back. Let me warn you guys, fine. This is a beautiful shot of Hong Kong. It's beautiful out there. On the ground, though, if you haven't been to Burning Man, step outside. That's what it feels like here in Hong Kong. It's hot, it's humid, it's uncomfortable, but at least it's nice to look at, right? And I would imagine everyone in the city agrees. There was a bout of rain overnight, I think random rain overnight. I was outside. But anyway, enough of my rant. Across the harbor, you see the skyline, of course, of Hong Kong, and certainly the contrasting realities of rents. So residential rent, I believe, is back to levels of pre-pandemic.
Yeah.
Commercial office rent is continuing to drop substantially across many of those skyscrapers that you saw in those.
Yeah, I mean, you take a look at what we've been seeing from some of these big developers, right? The likes of, the Chen Center with billionaire Li Ka-shing's, building, really let those declines among some of these major offices in the city. We're talking about a third.
Wow.
As much as a third. And what's really being the worst commercial property market slump in more than a decade. So
33%.
Yeah. And I think there's still some vacancies in those new buildings as well. The Henderson as well. They've been talking about denting rents for existing ones, according to some of those agencies.
I think it's 40% still vacant as of... Yeah, so the Henderson, which is right across the Chung Kong Center where we are, is about 40% of vacancy as of May. And of course, where we are, right?
Yeah.
30%. Wondering if we have to renegotiate.
I don't know.
Well, that's out of our control. That's out of our control.
That's above our pay grade.
Yeah, certainly.
But yeah, certainly it brings us to a lot to the outlook for commercial property and what does this mean, right? It's interesting. Bloomberg Intelligence came out with this survey that's found that firms in Hong Kong may actually need to offer salary hikes to get workers back to the office. Our senior analyst Patrick Wong joins us now. Yeah, it's interesting. I don't know if anyone's interested in doing that right now, but what were some of the key findings here?
Yeah, we did a survey over the past 2 years, and this one I think is getting more interesting results because we looked at for lots of the respondents. They are getting more and more saying that the flexibility is very important. There's 35% of them saying that they need the salary hike, right, by 6% or even more, right, potentially to see how it goes. But basically, I think the key is that they want to be like, if the employer asks them to work in the office 5 days a week, they need salary hike. So this is very interesting findings because we see that also have an impact on the office market, definitely.
Well, how are the other emerging trends affecting then? This is one of the factors that's affecting office occupancy, for example. What are the other key findings you've figured out here?
Another thing is that we also observe that all of those office workers nowadays, they also treasure the flexibility and also about the commute time. So that's very important because, yes, in Hong Kong, it's relatively convenient versus London,
so convenient.
versus Paris.
Who's complaining?
Right? Yeah, but still complaining.
Give me the results of that survey. I'm going to write a polite letter. I'm kidding. Yeah. But yes, go ahead. Sorry.
Yeah, so it's over half of the respondents saying that the transportation costs and also the commute time are very important. Also, making them a bit challenging to back to office.
Yeah.
Very interesting finding.
I mean, talk to people in New York, talk to people in LA, talk to people in London, and they'll tell you, yeah, what you got in Hong Kong is nothing. Yeah. Nothing. Okay. In terms of what the office landlords and their standing, where they're all in this, are there particular ones that you think could benefit from this?
I think this also means that for lots of landlords, if they have the office really atop the MTR stations, will benefit. So look at like Sun Hung Kai, they have the West Kowloon, the office upcoming. UBS will be the anchor tenant in West Kowloon. So that will change a lot. Like we just mentioned about IFC, right? There is also very convenient. But we also see upcoming the potential is West Kowloon. So that is also for Sun Hung Kai, they have a really mega project there. So we also benefit.
So it matters if the building is actually right by the metro station.
It has to be on top.
Yeah.
Don't even want to take a walk.
No. And, that takes us back to really our building right here. We're in between. What I don't like, though, is, you know how they tell you sometimes it's right by the MTR exit, but then the train is a few hundred miles from after that actual exit. You got to walk inside the station. Yeah, you're just walking inside.
Yeah.
That's
anyways, at least you're indoors.
Yes.
With aircon, right?
And it's relative. Like we're complaining. It's heaven here if you think about it, right? Everything is super convenient.
But I think the takeaway from Patrick is those UBS guys. You better go to work. No excuses now.
No. You have your own building. And apparently, we were speaking with the boss of the APAC CEO, right? Yeah. And he said they still want that pool.
Oh, yeah.
At the very top of that building.
I remember him saying that.
Yeah, right? So
more incentives to go to work.
What is not to like?
All right, Patrick, thank you. Great stuff there. Patrick Wong, Bloomberg Intelligence senior analyst, joining us there as well. Of course, you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter that's out every Thursday. You can sign up through the website, bloomberg.com/newsletters. All right, here are some of the top political stories we're following from around the world. The Philippine ambassador to Washington is warning that a conflict with Beijing in the South China Sea could engulf the Asian region. Speaking with the Financial Times, Jose Manuel Romualdez says that tension over a disputed reef has created an incendiary situation. Now, earlier this month, a clash at sea over a Philippine mission to the reef injured one Filipino sailor. North Korea has fired a suspected ballistic missile in the past few hours that South Korea's military says appears to have failed in flight. The attempted show of force comes about a week after Kim Jong-un struck a military pact with Russia that's alarming the U.S. and its allies. It's the first launch since Pyongyang fired off a barrage of short-range weapons back in May.
Yeah, and a perfect segue, really, because our team at Bloomberg Originals, they've been investigating how Kim Jong-un's regime has managed to actually build its nuclear arsenal despite the economic isolation. Have a look.
North Korea is one of the poorest countries in the world, and yet it's also one of just 9 nuclear powers. These are long-range ballistic missiles from North Korea, capable of striking almost any target in the world. North Korea has long used heated rhetoric against South Korea and the US, but recently it's raised the stakes.
North Korean leader Kim Jong-un rang in the new year with a rally hours after making new threats. Earlier, Kim ordered his military leaders to, quote, thoroughly annihilate the US and South Korea if provoked.
One of the things that we've seen over the past year is the relationship between Russia and North Korea really flourish. And so we're going to see that relationship deepen.
So how did a country facing crippling sanctions, where the average person earns less than $3 a day, manage to build such an expensive nuclear arsenal that may be capable of striking targets as far away as New York or Washington?
All right, if you want the answer to that, you can catch the full Bloomberg Originals documentary on the terminal, Bloomberg.com, and on YouTube. Now, I'm not checking the markets here. Of course, we're still checking those chip stocks here. It seems like you're seeing a little bit of that Nvidia effect back to some of these semiconductor stocks here today. Taiwan Semi's back up about 1% as well. SMIC, some of these Chinese semiconductor stocks also doing quite well here today. Hanhai, that stock rising as well as Target. That target was lifted at Morgan Stanley on the whole outlook of the iPhone replacement here. Now that you're adding to these all new AI tools, maybe we're going to see a big upgrade cycle as some are projecting. You take a look when it comes to China, though, overall, it is a bit of weakness across the board here. If you take a look at what the CSI 300 is doing, we're continuing to see that downtrend on onshore stocks there. Hong Kong faring a little bit better, but we're still down about 1/5 of 1% here. But look at HS Tech. We're back in positive territory.
There we go. The push out of the tech space here. Okay, that's the markets there for now. So coming up in the next hour of the China show, we're back on the ground at the World Economic Forum in Dalian, speaking with the Malaysian economy minister, and we'll be talking through, of course, things like the government spending priorities and what they should look like over the next year or so. Stay tuned for that and others coming up here on the China show. Happy Hump Day.
Welcome back to the China show. Here's a look at It's a pretty dreary day in Shanghai here today. Very different from what you're seeing in Hong Kong, which is basically clear skies. With CSI 300, not seeing not too much when it comes to clear skies here. We're just slightly down about 1/10 of 1% here overall. Offshore is also not doing too well as well. We are still seeing a down arrow story here today, Dave. But yeah, we still have, of course, day 2 of the World Economic Forum in Dalian. We have PMI numbers coming out over the weekend, so still some things to look out for. Also, Fed PCE coming up on Friday.
Industrial profits coming out of China. We're also, speaking of day 2, it's day 2 of the NPC Standing Committee meeting in Beijing, and certainly we're looking for clues on what to look out for next. And it's ahead, of course, of the 3rd plenum coming up at some point next month. All that being said, though, so when you look at price declines of 6 days, it's also worth pointing out that there's almost absolutely no volume coming through. 40%, 40, lighter than usual on the CSI 300. Same can be said in the Asia Pacific, where I think volumes are about 1/3 lighter than usual, 1/4 of 1%. A couple of markets are holding fort. Nikkei 225, as you can see, of course, is better by about 1.3%. So a lot of the chip rebound is we're seeing it play out in that market. In Taiwan as well, where you have fairly good representation, and the Korean markets. Now, also on your screens, which is probably the standout to the downside, are your Aussie assets, right? So ASX 200 is down 1%. That inflation print really coming in hot earlier on.
Yeah, 10 basis points higher in your Aussie 10-year yield. You see that spike up when it comes to Aussie dollar, Aussie yen certainly is what we're watching and seeing that strain here this morning. So 4% print for those CPI prices in Australia. That's the highest we've seen all year, and really kind of adds to the headaches of the RBA on whether they need to actually still fit in one more hike before the rest of the world kind of continues on this easing cycle. So certainly that's one to watch here as well. Let's get to our MLI strategist, Mark Cranfield, in Singapore. Mark, let's start with what we saw in that Aussie print. It wasn't just Australia. I saw Canada also. That inflation print was unexpectedly seeing some upside risk there and was actually picking up. It seems like how markets are really kind of underplaying this here right now. But how worried should we be about inflation picking up again around the world?
Well, I think bond markets will be very concerned. It comes in the same week that we've got the US PCE reports later in a few days' time. And of course, they're very significant for what the Fed has to do. So it's not that often that we get an Australian data report that really has consequences across assets. And you can already see what's going on here. So As you mentioned, there's a jump in Aussie yen, so that's even another problem for the Japanese authorities. Their currency is being pushed further to the weak side because of a strong inflation print in Australia. We're seeing weakness in the US Treasury futures as well in Asia, which we don't often see off the back of the fact that the Aussie bonds obviously are selling off pretty hard because the RBA is watching that number very closely for their next meeting in August. Now, you might expect that by the time cash trading gets going in the US market later today, that treasuries would reverse that. They often do. If they see a move in Asia, they pretty much ignore it when the American trading gets going. But because they have their own inflation data this week, they'll probably be more inclined to take it seriously. It's another signal that getting inflation down globally is not that easy. So central banks, whether it's the Fed, the RBA, even the Bank of England, are all showing that they're concerned that they're not being able to get it into the right place yet. And of course, you've got the Bank of Japan on the other side, who's hoping that inflation stays very high. So it's a pretty mixed up situation. Overall, pretty negative for bond markets.
Yeah, Mark, I wanted to dig deeper into that if you don't mind. So the course of travel seems clear that inflation is coming down in most parts of the world, but there is that sort of outside risk, as you underscore, of a potential next move higher, RBA, maybe a tail risk as far as the Fed is concerned. And I'm wondering, for traders, for example, is that trade profitable to trade against consensus, given the sort of data we've seen, Canada, Australia, what have you?
Yeah, it certainly is when there's too much priced in. And we've recently seen it you take the Treasury curve, for example. That 10-year yield has been pushing down to something like, we got down to about 4.2 recently, when you've got the cash rate still at 5.5. So that discrepancy is pretty large. That gives you lots of room. If you think the Treasury market is pricing in too many rate cuts, there's certainly room for it to move back. Even if it moves back 25 basis points, that's a pretty decent move in a 10-year Treasury yield. So there's no question that because there's such an emphasis on the fast movement, particularly with derivative markets as well, people are willing to put money to work very quickly. These discrepancies come up from time to time, and there probably is one right now. So if we get a hotter than expected PCE report at the end of the week, there's certainly room for bond markets to sell off a bit more, because we're still pricing expectations that the Federal Reserve will lower interest rates this year. They might not be able to. If they can't get all their inflation numbers into the right place, it will be very hard for them to lower rates.
Mark, outstanding as always. Mark Cranfielder, MLive strategist out of Singapore for us. In fact, just on Mark's point, I'm looking at cash rate futures in Australia. Actually, for the next two meetings, they're actually pricing the possibility of rates going even higher before they go lower. From that, let's take it now straight back to Dalian and the World Economic Forum. Summer Davos taking place there. And Steve is standing by with his next guest. Steve.
Yeah, that's right. Rafizi Ramli is my next guest. He is the Malaysian Minister of Economic Affairs. Thank you. It's been a long 9 days for you, right? In China, big mission here, obviously. And Malaysia, from my understanding, is a very interesting spot by attracting investment into the chip industry. I mean, I go way back. I remember Intel was in Penang from 1972. You have a chip industry, but you're attracting a lot of the big names. Nvidia, Google, Microsoft, you know, there are going to be data centers, ByteDance as well. What have been the crux of your discussions here in China over those 9 days?
We are looking to expedite Malaysia's transition from the existing back-end part of the semiconductor into the front end. And
so design, things like that.
Integrated
so not just assembly and data centers.
Yes. And China has been able to do that quite well. And it's very much related to the kind of innovation that they have been able to roll out with their consumer products businesses. And IC design is very much related to electronics products. And we've been talking to companies that form the front-end design ecosystems And I think they also see there's a good fix with Malaysia and ASEAN, because ASEAN is expected to grow to become a strong and big consumer product markets in the next 10-15 years. And the kind of market environment that allow IC designs that you have seen in China, there's also that fit and potential in ASEAN, and Malaysia has a very strong foothold in semiconductor.
Do you find yourself in an interesting position as kind of representing the global south in the way of these non-aligned countries that are moving up the value chain, as you just described, but being non-aligned to the bifurcated world that we've seen? Let's face it. I'm sure you've heard this question before between China and the United States. You're attracting the likes of Google and Nvidia, but also the Chinese chip designers. Does that put you also at potential risk, or do you see this as a great advantage?
It is both, actually, but we have been able to build our economy in the last 50 years on a few important philosophy that we know our place in the world. We are a small country, but we are also very open, and we are fiercely non-aligned, and therefore we've exerted our active neutrality to make sure that we offer the best value proposition to all our partners. Over the last 50 years, we've become an important part of the global supply value chain. And I think that will remain a complicated issues to navigate, but we've done it for the last 50 years.
Now, I've heard of as well, ByteDance, for one, likes to see Malaysia as perhaps building a AI hub. How are you going to be part of the AI boom and supply chain, not only for the American companies, because as I mentioned, Nvidia, a data center, Microsoft, Google, Intel's been there for a long time, but for the Chinese companies, you have contracts ready to sign beyond ByteDance and the others?
We've met ByteDance. Of course, I think the focus now is to strengthen our infrastructure offering. The reason why Malaysia is seen to be very important for AI for ASEAN region is because our leadership of the data center industry. So apart from ByteDance, a lot of our discussions with potential Chinese investors so far are those who are planning to build more data centers catered for Chinese companies that will be running the LLMs and everything for ASEAN in Malaysia. And I think as you attract more and more of the high quality investments, obviously they have to run some form of modeling. So it is not necessarily the kind of business model that you see with Google, with AWS or ByteDance, but we're also providing the cloud infrastructure that will enable other companies to do it.
I remember in the 90s, though, Mahathir talked about the multimedia super corridor. That was a big push to move Malaysia up the value chain, but it really kind of got caught up in the lack of power, the power problems. Do you have the infrastructure that is necessary, and what kind of investment are you going to get from the Chinese to build out the power grid, to build out all that infrastructure that is needed to go upscale like you were talking about?
I mean, we've launched a national energy transition roadmap, Steve, last year. And within a year, we've seen an increase of 300% in investments into renewable. And one of the reasons why Malaysia is very attractive as a destination for IDCs is precisely because there is a sense that Malaysia will be able to provide energy, and not just energy, the right combination of energy mix. We have our target for installed capacity to form 70% of our energy mix by 2050. So part of the ecosystem in order to deliver this is a national plan independent of any investments commitment.
Particular companies.
Particular companies.
But again, on the earlier question, I talked about the opportunities and the risks of having the Chinese come in. And I mean, have you had these discussions? We've heard reports that there are discussions by Chinese companies, even the government, seeing what Malaysia, how you're positioned. So if Chinese companies come in and they build whatever chips there in Malaysia, that they could potentially circumvent U.S. sanctions. Is that something they are asking, that the products that would be re-exported out of Malaysia onward to the United States could avoid sanctions?
I do not know what has transpired with other agencies or ministries, but with me it has not. Our discussion was mostly on two fronts. First, in developing Malaysia as launchpad to the ASEAN market. There is a bet that ASEAN market is going to be a big consumer market in the next 10, 15 years. So the focus is always been how do Chinese companies, which previously were satisfied with their domestic market, go international. And if in the past the focus is always about the consumer markets in North America or Europe, because these are seen to be more developed, there is a realization now actually ASEAN is going to be that next market, and the sooner you move and the sooner you work with the market, the better. So far, a lot of my my discussions with these 100 meetings that I've had in the last 7-8 days is all from that perspective. The other perspective that Chinese businesses are looking at is how do they optimize in terms of the stage of their technology. It's like coming to Malaysia will allow them to develop into ASEAN because they offer a very good value proposition, because they know enough. While Malaysia has a very strong manufacturing base, but we do need that high quality investments, especially in terms of tech innovation. And they also understand from our own policy that we are focusing on developing the whole financial capital deployment infrastructure that is quite immature in Malaysia now. For us to be able to accelerate innovation, you need very big PEs, VCs. You need these companies to be working with the financiers. We don't necessarily have that. So the focus has always been on these two fronts, and I've not had a single question, to be frank, so far about tariff or circumvention.
Boy, everybody's talking about it here, though. The Department of Commerce in the United States talking about tariffs or investigation into solar that is being exported out of. But I know you're not the trade minister.
So right. Most probably I was spared of that because I'm not the trade minister.
I'd be remiss not to ask you at least a couple of questions on the domestic economy, because you're going to be retargeting or removing some subsidies on RON 95, which is petrol, gasoline. This follows the same thing that you did on diesel. I mean, we saw prices, inflation spike up. Are we still on target for this year for the rationalization or retargeting of fuel prices? And then what's that going to mean for inflation?
I know the questions that everyone now is chasing me is that what's next, because in Malaysia you have diesel, which is primarily for industry, and you have petrol, which is for citizens, For the time being, we are focusing on diesel because the big leakages actually happen with diesel first. And I think we do need to make sure and learn from the process to improve the overall system,
But we know about diesel, and there was some hoarding, and the prices went up 50%. Is the same thing going to happen with RON 95, and is it going to happen this year? Are you going to give a timetable this year?
You see, I think we will keep the card close to our chest in the same way that we surprised everyone with diesel. So we did surprise everyone with diesel, then I think everyone is up for another surprise.
Okay. All right, Minister, thanks so much for your time. I could talk to you for a long time, but we're out of time here in Dalian. Okay, guys, back to you.
Steve, thank you, of course, and thanks to the Malaysian Economy Minister, Rafizi Ramli, there for that interesting discussion. The next hour as well, we're speaking with the former U.S. Assistant Secretary of Defense, Graham Allison, about whether he still thinks the U.S. and China appear destined for conflict. More still ahead, of course. And of course, we just got that latest news when it comes to Shimao. That wind-up hearing basically adjourned to the end of July now. So July 31st, mark your calendars. Maybe a sign of good news that potentially they've made some progress in these restructuring deals as well. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. Here are some of the big political headlines we're tracking at this point. Let's start things off with an update on the South China Sea here. So the Philippine ambassador to Washington is warning that a conflict with Beijing in the South China Sea could engulf the Asian region, he says. So speaking with the FT, Jose Manuel Romualdez says that the tension over a disputed reef has created an incendiary situation. Early this month, of course, a clash at sea over a Philippine mission to the reef injured one Filipino sailor. Now, New Hampshire is suing TikTok for allegedly misleading users about the safety of its design features and protections for children. The complaint accuses the social media platform of exploiting young users for profit by creating an addictive product that's harmful for their mental health. Now, a spokesperson for the company says the app has industry-leading safeguards to support teens as well as parental controls. Now, a gag order against Donald Trump in his New York hush money case has been largely lifted. A judge ruled that Trump could now talk about witnesses and jurors, though he's barred from revealing those identities. Now, that gives him effectively more leeway to criticize the proceedings as he campaigns for the White House. Trump and President Biden are due to debate each other later in the week.
And staying on the election theme, an anti-green backlash in this year's global election supercycle is already taking a toll when it comes to ESG assets, with the ultimate test still to come in the U.S. presidential vote. Let's get to our Bloomberg Green reporter, Aaron Clark, joining us from Tokyo. And Aaron, it's good to see you. I mean, the election wave this year around the world is creating a bit of anxiety around these climate change related policies. How are investors reacting so far?
No, absolutely. You know, we're seeing investors pair exposure to sectors including renewable energy and electric cars as candidates this year have raised concerns over the costs and speed of efforts to curb emissions. Just to give you an example, a couple examples, a Solactive European renewables gauge has dropped about 3% since this month's European Parliament election, which of course saw support for green candidates slump. Government debt has tumbled in France, with Marine Le Pen's far-right rally party leading polls ahead of a June 30th vote, and the development bank SFIL has postponed a green bond sale. So those are just some of the reactions we're seeing to elections this year.
Well, speaking of, the big one is, of course, in November, and looking at potentially a Trump 2.0, Trump White House. How are investors preparing for that potential outcome?
Yeah, we're definitely seeing that. We're seeing a surge in liquidations of exchange-traded funds aligned with ESG goals. So, for example, bets by hedge funds against the $2.2 billion iShares Global Clean Energy ETF. This is a flagship renewables fund, have risen to the highest in a year. Investors are weighing both green pushback and the higher for longer interest rates. But that ETF has declined more than 22% in the past 12 months, compared to a 26% gain in the S&P 500 index. I think few investors expect Trump, potential new Trump presidency to scrap President Joe Biden's Inflation Reduction Act, which offers support for green industries. But many are considering the impact of any renewed move to withdraw the U.S. from the Paris Agreement on global warming. And they're also considering, the easing of environmental regulations.
Aaron Clark, thank you so much. Our green reporter live for us there in Tokyo. Plenty more ahead, plus market update and something interesting happening in the Aussie markets following that hot inflation print for May. More on that in a moment. This is Bloomberg. Right, there we go. So I think we're just moving into 12:30 in the afternoon, so about 2 hours ahead, if I'm not mistaken, here. Over in beautiful Sydney, I should note there, where the weather should be cooling, but inflation is quickening and warming up. So we're looking at a third straight month that inflation actually came in hotter than expected, and that's really leading to the spike you're seeing in the Aussie dollar. That's also leading into the spike, these bets that are ratcheting up for a potential hike at the September meeting. So the current probability has that now at 50-50. And this changes, of course, second to second, minute to minute. But certainly we've seen a massive change from about pre-inflation report to the current levels right now. So effectively 13 basis points of 25 is priced for the September meeting. We'll see what happens with this, of course.
Yeah, this is the third straight month that we've seen actually inflation surprise the upside. So certainly a lot to talk about among the RBA here right now. But yeah, our very own Bloomberg Economics is saying you might have to wait a little bit more, right? We still got a June print. We still got a quarterly sort of print as well that we have to deal with as well. But there you go. You're seeing the AXX down about 1%. Aussie is bid. So are these yields, or at least Aussie yields are heading higher substantially here. Plenty more ahead. This is Bloomberg. $11:29 a.m. in Tokyo here right now. Japanese markets heading to that lunch break, and we're seeing quite a good day when it comes to Nikkei 225. We're seeing an upside about 1.4% here right now. Dollar yen still flirting with that 160 territory here this morning. Yields are taking up by 1 basis point. It's interesting. There's a new survey coming out from Bloomberg about what people are thinking when the BOJ meets next month, July 31st, right? Can they do QT and raise rates at the same time? You're seeing more and more a growing chorus of BOJ watchers saying, yeah, possibly. 33% did think that you could do both, maybe.
Wow, okay, that's a non-negligible group of people. The 10-year yield is up above 1% for the first time in 2 weeks ahead of that meeting, which is in about a month's time, right?
Yeah.
So we'll see what happens with that. And certainly if you missed our story yesterday, the thinking now is not 160. 160 is, you know,
that's the old
line you said, yeah. 160, 170 is the new red.
165 could be the new intervention.
Yeah.
That's according to Citi as well. But yeah, it seems like you're continuing to see more upward forecasts here for dollar yen moving forward.
Okay, so apart from Japan and apart from markets in Sydney, nothing else is happening across these markets. Yes, price is higher. The volumes are not there at all. I think we're down 35% lighter than usual for this time of the day. So we are approaching mid-morning session, an hour into the Chinese session here as well. Now, the other big piece on the agenda in Chinese markets, particularly in credit markets, offshore credit markets, are these hearings taking place here in Hong Kong. So Shimao was one, and we did get a headline and an update coming out of that. So the winding up hearing, which is good news, right? If you have I'm using symbolism here, a second date.
No
right?
liquidation.
Yeah, no liquidation. So that's progress has been seen. Let's bring in Daniel Fan, our credit analyst, to talk us through, of course, what his thinking is of the news and where we go from here. So let's start with this. It's being adjourned to a later date, which is good news?
Yeah, which is good news.
Okay.
It looks like the company is likely to improve its terms, but we don't know the details yet. So I think there were a couple of debating points about the original plan. The first one is a lack of cash option, meaning that the plan won't allow bondholders to exit at even a lower price. Second one is the high conversion price for the NCB, which was like Hong Kong dollar 8.5. I think the share price is trading at below 1. But having said that, when they announced the plan, share price was even lower at below 50 cents. Another debatable point is about the haircut, despite the NCB. So which is another point that, bondholders may need to negotiate with the company.
Yeah, I think Reuters had reported that potentially the developer had offered some sweeteners for creditors overall. I mean, what do you think that they need to do to improve this plan?
I think maybe they can offer like some money, set aside some money for exit, meaning like buying back the bonds at a lower price. They still have like 9 billion yen on balance sheet, which is low, but it's not that low. And I think an easier part may be on the conversion price of the NCB, because the price is way too high if you compare with the existing price. NCB is a non-cash item. Maybe the shareholders may make some concession.
Yeah, I think the share price is below $1, and I think the conversion rate that I've seen is above 8, if I'm not mistaken, or not, wasn't it?
8.5, yeah.
Yeah, a bit higher. Now, how complicated will any restructuring be? All of these things are complicated, but in Shimao's case, compared to the norm, how would you rate this one?
This one is a little bit more complicated because of the fact that it has another company, Shanghai Shimao, which was listed in Shanghai, but that subsidiary was delisted recently. So which made the whole situation less transparent because it's no longer listed and lack of proper information from that perspective.
All right, Daniel, thank you. Daniel Fan there with that update, our Bloomberg Intelligence credit analyst. Speaking of China, it's interesting what we've been seeing with some of these forecasts as well. Economists have upgraded their projections for China's full-year growth to 5% now on the back of strong exports, even as we start to see consumer spending continuing to slow. Our China correspondent Min Lo is here with details from our new Bloomberg Economics survey here. What's the overall picture that they're painting?
Yeah, so the outlook is now improving a little bit, and that's really buoyed by exports. If you take a look at the chart, the forecast that we have, the biggest jump is really in exports, up from the May forecast of 2.8%. It's now at above 4%, and this is really driven by stronger global demand that has shifted from services back to goods. It also reflects the stronger competitiveness of Chinese producers, especially with all these new productive forces, the EVs and the like. But also, this is an area where you're facing stronger headwinds as well, these accusations of overcapacity, increasingly more trade barriers targeted at Chinese companies. But for now, though, it seems like it's enough to offset that sluggish consumption growth. Let's flip the board, take a look at the forecast for retail sales. That's revised down to under 4% now, I believe, under 5%, down from 5.2 in the May survey. And economists also paring back expectations for consumer price inflation and factory gate prices as well, really reflecting that ongoing pessimism in the domestic economy as consumers hold back spending over fears of job security, income growth. If you look at the first 2 months of June as well, home sales continue to extend declines. I think it's down 26%, and car sales as well, down 19% in the first 2 weeks of June.
So is there anything the government can do to boost spending? Because that's almost a second derivative of what's directly under their control.
Yeah, look, now the forecast is 5%, which is really in line with the government's target. And yesterday as well, Premier Li Qiang said that they are confident of reaching that target. He spoke at the World Economic Forum yesterday. So if everything goes on track, we don't expect the government to really pull out the big guns to overstimulate the economy at this point. If you look at monetary policy, the PBOC has been reluctant to cut rates. Economists still expect there to be rate cuts to the MLF and loan prime rates in the third quarter. They are pushing back expectations for a RRR cut from the second quarter to the third quarter, given the central bank has signaled this shift in priority from expanding its balance sheet to really maximizing the efficiency of funds in the market, because there's still ample liquidity now. Fiscal policy, we have to wait for that third plenum that's coming up anytime in the next few weeks, where perhaps there may be policy reforms when it comes to youth unemployment, which is really important because youth tend to be the biggest spenders. Yeah, and also perhaps reforms to boost confidence among the private sector as well.
Okay, Min, thank you so much. Min Lo, our China correspondent, on the latest thinking here, latest economic survey, and also this separate piece out of Bloomberg Economics looking at high-frequency data, the first 2 weeks activity slowing there for the first 2 weeks of June. Right, plenty more ahead. We'll leave you to look at markets. Japan's on a lunch break, and that's just about the only market that's really seeing this material upside. Chinese markets, though, as you can see on your screens, mixed, with the CSI 300 down for a 6th straight day. The difference a day makes, doesn't it? Okay, so Nvidia was down 6% on, what day is it today? Wednesday? On Monday, up 6% on Tuesday. The opposite was true for Asian chip stocks yesterday. The opposite of today is true. Sorry if I'm confusing you even further. So down on Monday, up on Tuesday, up today. There we go.
There you go.
Advantest, 6.7%.
Yeah, we've got to focus on that company in particular here. A supplier to Nvidia, just delivering a medium-term plan targeting an average operating profit margin of up to 28% through the fiscal 2026 year. We spoke to the CEO, Douglas Lefevre, about how the company is leveraging the AI boom.
It's no secret that AI is driving so much of the industry, and we're part of that as a capital equipment supplier into semi, particularly in the test solutions area. So AI, just by its nature, is very complex devices, and complexity typically means a lot more test content to ensure yields and reliability.
And HBM, high bandwidth memory, making up more than 50% of your memory testing business. Do you expect that share to grow?
We expect that to stay relatively similar, if not higher. There's a lot of other content that is related to high-speed DRAM devices as well that is associated with kind of data center build-outs right now. But certainly HBM is the hot topic right now.
When you're looking at the outlook for the broader chip sector, what's the difference between what you're seeing short-term and long-term? Are you seeing the demand short-term as you're expecting to see given the AI boom in the longer run?
Yeah, I think it's a very interesting question and very relevant. Certainly, the data infrastructure build-out with AI is upon us, and that's still in the beginning stages, I would say. But what's coming closely behind it now is the use of AI in edge devices. And so mobility and other consumer electronics, we are seeing now that pick up. And typically, that will have a very, very long lifespan as these computational architectures are upgraded.
We talked a little bit about those upgrades. Douglas, what do you see as the spend forecast, right? Is there a risk that a lot of these cutting-edge products are going to be prohibitively expensive, and does that then correlate to perhaps a slowdown of output?
I don't really think so. I think that the efficiency gains that are being brought forth by some of these complex devices and with AI and high-performance compute, they're priced at a point that is creating value for their users and for the industry, and so we don't see that stopping.
So do you see the trend of ever-shrinking transistors as one that just continues as the AI boom continues to demand that?
Certainly when it comes to process nodes, there will be a continuation of Moore's Law, though it's slowing. And I think what's important for everybody to understand is that it's not just Moore's Law. Now the industry has figured out how to do what's called 3D packaging. So the devices can go into the vertical space, and they can include many, many different chiplets or dielets in a package that then is something with higher content and higher value.
That was the Advantest CEO, Douglas Lefevre, speaking on the Asia trade earlier this morning. Some big corporate stories that we're tracking for you today. Rivian shares jumped after the bell in New York as Volkswagen announced plans to invest $5 billion in a joint venture with the EV maker. The tie-up will give VW access to Rivian's technology for its cars. It's also a much-needed source of fresh capital for Rivian, which has struggled to ramp up production and deliveries. Chinese online retailer Meituan is said to be considering raising more than $1 billion through a bond offering this year. Sources say the proceeds would be used to repay some debt and fund overseas growth. Earlier this month, Meituan's CEO said the firm was looking to expand beyond Greater China and into the Middle East. Paramount shares fell after the company revealed it's talking to potential international partners for its streaming TV business. The co-CEO, Chris McCarthy, told staff a deal could transform the online service and make it profitable. Earlier this month, Paramount's controlling shareholder, Sherry Redstone, turned down a merger offer from Skydance Media.
Right, coming up, back to Earth. China hailing the return of a spacecraft carrying samples from the the far side of the moon. Important milestone for future lunar explorations. The details on that milestone and the implications as well coming up next. You're watching The China Show.
Time for your China Brief this morning. A look at what's making headlines in national newspapers and trending on social media. The China Securities Journal says that local government special bond issuance may peak in the third quarter, with 27 provinces and regions unveiling plans to raise a total of 2.36 trillion renminbi. Now, the report says the funds raised will support infrastructure investment needed to stabilize growth. The financial paper is also running a report from Xinhua News Agency on the travel market outlook, citing the China Tourism Academy. It says inbound visits will continue to rebound this year, with foreign arrivals expected to hit 80% of pre-pandemic levels.
Now, what is dominating today's headlines is the successful return to Earth, if that's not clear, of a Chinese spacecraft carrying samples from the far side of the moon. Now, state media leading with President Xi Jinping and his message congratulating the mission here, calling it a landmark achievement for China's science and tech ambitions. Now, that story is also among the hottest topics trending on Chinese social media today. In fact, national pride dominating sentiment among Weibo users, with comments saying that the moon mission showcased the strength of the nation. One user posting that it brought tears of pride. Oh, that's touching. There we go. So that's great context, of course, and really the big picture of China's space ambitions is really.
This is the one that had the landing had it's a Zhongguo, right? With a bit of graffiti, as they called it, nationalistic graffiti as well. Let's get more on the mission itself and really what it achieved and what it means for China's space ambitions. Our Bruce Einhorn joins us now. Of course, this is supposed to unlock a lot of mysteries that we see in the moon. I mean, what do you think? Why was this mission so important?
Well, this is important because it was the first time that anybody had done a sample return mission, meaning going to the moon, picking up rocks, regolith, the surface material of the moon, bringing it back. The first time anyone had done that from the far side of the moon. There have been sample return missions from the near side. Going to the far side is a lot more difficult because it's never in direct contact with the Earth. China is the only country that's ever landed on the far side. They landed the first time in 2019. This latest mission was the second mission from China to the far side, the first time that they actually went, picked up rocks from there, brought it back. Scientists are very excited because the composition of the far side is very different than the near side. When you and I, when we look up at the moon, we can see the sort of the flattish kind of areas. So those areas that they call them seas in English, those don't exist on the far side, and the far side is a lot rockier, a lot more craters, so very different composition. So it's exciting for scientists. Strategically, it's also important because there is a competition between China and the United States to send astronauts to the moon, to establish bases on the moon. There's a theory that there might be reserves of water frozen as ice near the South Pole and also on the far side. So being able to explore those areas could be very important longer term as countries try to establish their presence on the moon permanently.
Yeah, and I think what we just showed our viewers is an animation. There was actually no camera that was shooting the actual landing and takeoff of the aircraft. What comes next then after the successful mission?
So this was Chang'e 6. Before this, Chang'e 5 was the sample return mission from the near side. Before that was Chang'e 4, which is the first one to go to the far side. So next is Chang'e 7, which I think is supposed to be in 2026. There are a couple more Chang'e missions. These are all now working toward eventually getting Chinese astronauts to the moon for the first time. The goal is to do that by the end of the decade. And then further out, the Chinese want to build a permanent research station near the South Pole. That's something that China is working with Russia and trying to find some other partners to join up with. That's in opposition to what the United States is doing. The United States has a plan to send astronauts back to the moon for the first time since the Apollo program, which ended in 1972. The United States is working with Japan and a lot of other countries on the Artemis program to send astronauts back there. Japan is supposed to be working, developing the lunar rover that will be part of that program. The U.S. also wants to build a base on the moon. Other countries also are looking to the moon.
Yeah, I was going to ask, wasn't India involved at some point trying to get to the dark side of the moon? I could be remembering, mixing my facts up, but yes.
Yeah, a couple of things on that. So yes, India landed near the South Pole, not on the far side. It was on the near side. And just a little bit of pedantry here. Yeah. We can't call it the dark side. We have to call it the far side because...
Who knows?
Well, no, but we know that the sun is always shining. It does shine over there. We just can't see it. So, Pink Floyd notwithstanding, it's not
That is, what's also probably there, and I'm hoping that they get information on this.
What?
You know where your socks go when you wash your socks, and you're always missing some of the...
Oh, maybe that's where they go?
Maybe that's where all the socks go, the lost socks.
Yeah, so maybe that'll be in the payload that just came back yesterday.
Quite a light load. Sorry. Bruce, fantastic. Thank you so much, Bruce Einhorn there. Context and a little bit of comedy, too. There we go. Okay, market-wise... Aussie, that's the big story today. So that hot inflation print coming out of Australia, the monthly numbers coming in 4%, third month in a row that it's been hotter than expected.
Yep. So you talked about what the odds of a hike are basically 50-50 for September now. So that's what the speculators and what the bond traders and are pricing in right now after they said, yeah, this is a hot report. We're expecting acceleration, but not a 4% handle. That's the highest we've seen all year. You take a look at what in terms of what other stocks and what else we're watching out for here today. Colmar, this is what we're seeing. This is also a cosmetic maker. So a bit of a focus here on these cosmetic stocks right now. So the shares are jumping on the share cancellation. Also, there's been some news on the value up program as well. They announced a plan to cancel treasury shares and other mid to long-term shareholder return policies. So the first to really announce a corporate value up plan initiated by the South Korean regulators. So you're starting to see some more corporate voices really, implementing more on this sort of program.
And they also have interesting in the filing too out of Colmar, they laid out a specific target of where they want price to book to be and shareholder return. So we know a lot of these corporates are slowly getting on board, and this is perhaps one of the first few, if not the first one, that have come out with a tangible target of where they think, or where they will, endeavor, to use a space term, if you will, to get their shareholders return back up. So shares, as you can see on your screens, are up. Okay, we're looking at also some of these weight loss related plays, if you will, on the Chinese, and as you can see, up substantially here. This is really I'm just looking at some of the news here coming through.
Wegovy.
Yes, there we go.
Have you heard of that?
Okay, I'm going to bring it up right now.
Basically, it is a weight loss drug. It's approved in China. So that certainly is an improvement in development there. And that's why you're seeing some of these stocks are surging on the back of this. So this is, of course, the drug developed by Novo Nordisk here for chronic weight management. So really offering up competition for these next generation obesity drugs in China as well. So, yeah. There's that. It was interesting. There was an interesting story out of
a side piece to this, right?
About this whole wave of Ozempic. What does this lead to, right? Yes, it's certainly helping all these pharma companies, but plastic surgeons are also loving it because of what happens after you lose all the weight.
Yeah, the procedures that might follow, of course, weight loss,
tummy
right?
tucks.
Yeah. So I think there's a great graphic on the Bloomberg story on this. Everything from facelifts, lower body lifts, tummy tucks, upper arm lifts. There's a comparison between the number of procedures we saw in 2022 and 2023.
It's crazy.
Anyway, we talked about the the far side of the moon. Why not talk about some of the stuff that might be not as visible, I guess, to the naked eye. Markets looking like this. Japan, 1.4% in lunch break. Asia is up. Volumes are down. That's it from us here on the China Show. Bloomberg Markets Asia is up next. This is Bloomberg.